Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. Hope everybody had a very beautiful weekend and hope you guys are making the most of this gorgeous summer so far. And in today's video, guys, it's that time of the week again where we cover the top 5 options plays for the upcoming week. Now, keep in mind, guys, most of all these options plays are going to be selling options plays. More specifically, we are going to be selling puts. Now, if you don't know what selling puts is, it's a very, very easy strategy to do, whether you're a beginner, intermediate, or even advanced investor. It is basically putting buy limit orders that pay you. Just think of selling puts as a buy limit order that pays you if ever it doesn't get filled. Let's take a quick example for just example purposes, right? So if we want to buy Amazon, let's say we want to buy Amazon around the 172.50 mark down here, but we're not quite sure if it's going to get there before Friday. Well, a good strategy could be, the one that we use on the channel, is to sell puts. And keep in mind, the 172.5 puts on Amazon right now are trading for about $87 each. So if you write one of these puts on the Monday morning, your goal is that the stock does not drop below the 172.50 mark. If it stays above, well, you simply collect all of that $87 in your pocket. And if ever the stock does close below 172.50, you will be assigned the shares. You still keep the $87, but you have to buy 100 shares of Amazon at the designated strike price. If ever we are assigned, we are going to write covered calls against the position and generate even more premium, which is going to lower our break even more and more and more. And we do the covered call strategy all the way up until the stock rises above our assignment price, and then we're out and we keep all of those juicy profits. Very easy strategy to run, guys, and the way that I present it on the channel, it's a very high success rate as well. Usually 90 to 95% of all positions are very nice winners. And I've been doing these top 5 videos, guys, for the past 3 months at this point, and I can firmly say that we have only ever been assigned 2 positions on the channel ever since running these top 5 options plays video. One was on AMD all the way back here at around the 150 mark, and you would have been able to get out of this position at a profit thereafter. And the other one was Apple in these lower ranges right here. Then some people got assigned at the 172.50 level, and the rest is history. You would have been able to get out of this one at a profit. Every single other play, guys, was basically just a very quick writing puts and just closing them for 100% profit by the end of the week. So very easy strategy, guys. In today's video, we're going to go over a few of the strategy rules to start off with. Then we're going to dive into last week's top 5 options plays, and then of course conclude with this week's top 5 options plays. I'm going to give you guys a bunch of bonus tickers to keep an eye out on because there are so many juicy opportunities in the market right now. Now, before we get into the rules, let's give ourselves a little bit of context of where the markets closed last week. So we ended the month of May, gorgeous monthly candle close, and the month of May still in a very firm bullish uptrend on the monthly. On the weekly as well on the SPY, very bullish uptrend, retesting our prior range of support. Very, very nice rejection, and the bulls are really holding their ground. On the daily, although we are in a little bit of a downtrend here, which could continue into the lower levels right here, I still do believe that our longer term market bulls are in control. So all of these dip opportunities into this zone should be just that, guys. Dip opportunities on very beautiful companies to continue going long. Now, in terms of our macro data that we have to look out for this week, well, there's not really much, only a few minor events, right? Monday, we have the ISM manufacturing PMI. We then have services PMI, smaller reports for the whole. But the big one is going to be on Friday, guys, non-farm payrolls. That's your biggest jobs report of the month. And that is going to be a very big event for the markets, but we should have smooth sailing until pretty much that date. In terms of earnings, we don't really have many big earnings this week. I will be playing a few of them, however. We do have CrowdStrike on the Tuesday. We also on Wednesday have a few other major names such as Dollar Tree to keep an eye out for. Lululemon as well is a decent one. And on Thursday, we have a few more here. We have NEO before the open, DocuSign, and a few more like that. But for all in all, guys, earnings season is largely behind us at this point, so no really major volatile events from earnings either. So it should just be a week of monitoring the technicals because we don't really have any big outside factors that can affect these markets. Now, before we get into our last week's top 5 options plays, guys, let's go over a few of the strategy rules, and I'll go through these extremely quickly because I have a 30-minute video on the channel dedicated to explaining the ins and outs of the strategy in depth, right? How I choose my plays, how I choose my strikes, what we're looking for, all of that. I'll leave it in the video. It's going to be linked top right corner in the top right corner of the video right now and down below in the description. So if you want to have a more in-depth, detailed view at how to run this strategy, please watch the video. It's a very, very good one that I made a few months back. So in terms of the strategy rules, guys, very, very simple to run the put wheel strategy to sell puts pretty much. So number one, the most important rule of all, only ever write options on a solid company, guys. You don't want to be writing puts on a company you do not want to own, because then managing the position becomes a little bit emotionally cumbersome. You want to be doing these on high conviction stocks for you. That is rule number one. Do not forget it. Now, number two, we want to be writing puts on stocks that are in a monthly uptrend or a long-term range. This just shows us the long-term bulls are behind us. So if you take, for example, Autodesk right here, the support trade, well, we'll be targeting stocks that are in a big area of support. So writing puts down here towards support is a very, very juicy endeavor. The breakout retest trade is something like this. When the stock breaks out from a range, retest the top of the range at the top right here, and then runs. This little retest area right here, very, very high probability trade for some continuation. So all of the plays that I do present on the channel, guys, will be one of the two, either a big support area or an area of breakout retest. Now, number three, no earnings this week, guys. Very, very, very important. Everybody saw what happened last week on CRM, right? Sometimes earnings can be pricing in a 5-6% move and move 20% plus to the downside, right? So to avoid all of those volatile events, if you really want to keep this strategy extremely simple, right? We never want to be writing positions on stocks that have earnings this week. Just avoid them altogether, guys, and you're going to have a very much smoother P&L, right? Now, number five and number six go hand in hand, writing on red or flat days and writing at or lower than the expected move. So any stock, guys, in a given week has an expected move in the markets. If you don't know what the expected move of a stock is in a given week, just go to optionsai.com. They have a free tool that you can use to derive the expected move. It's just the probability that Wall Street attributes how much the stock can move up or down in a given week. Here on Amazon, we can see the expected move to the downside is 172.01. So what we want to do, guys, is we want to couple these two things at the same time. If Amazon opens red on Monday, that may open up the territory to be writing at or lower than this expected move. If we're always writing at or lower than the expected move, guys, it just increases our probabilities of not being assigned, because usually when stocks go at or lower than the expected move, they tend to have a bounce. The market makers will bring them back intra-week for us most of the time, right? Now, number six, very, very important as well. We want to be writing between 0.5% and 1% in weekly premium, guys. After years and years of trading this strategy, this is pretty much the sweet spot that I've derived. It gives us decent profits in terms of annualized ROI, but it's also not too risky. The problem is when you go over 1% in weekly premium, guys, the strike prices are too close to the underlying stock price. Your risk of assignment is very, very high. So we always keep it between 0.5% and 1% per week. If you don't know what that means, guys, 0.5% would just be looking for half of the strike price in cent increments, right? So half of 170 is 85. For this option to be worth it for us, we need to find at least 85 cents on this bid right here. That's just a very quick mental math way of doing it. So as you can see, the 0.5% rule would be fulfilled on Amazon at the 172.50s. We're getting 0.5% for these contracts. That's very good. If we go too high, however, on Amazon, well, now we don't have, dollar rounding strikes, but let's say Amazon is currently trading right now at 176.44, right? So if Amazon had a 176 strike, it would be way too close. The premium would be over 1%, right? You can see here for the 175s, we're getting $1.60. Over 1% would be over $1.75. Usually when you see over 1%, guys, it is too close to the current stock price. Your risk of assignment is just too much. So in that case, guys, that's why we always keep it between 0.5% to 1% in weekly premium. And lastly now, take profit at 90% of the contract value, guys. The beautiful thing about this strategy is it only really requires about 15-20 minutes worth of work on a Monday and then Tuesday morning as well. And then you just set the positions and let the time decay do the rest. Let the time decay pull all the premium out of those contracts into your pocket, right? So To ensure that we're taking profits adequately, just put a take profit order at 90% of the at 90% of the contract value. It just ensures that if you're not at your computer Wednesday or Thursday, when these do go 90% profit, well, at least it's able to automatically do so. Now, if ever we're assigned a few positions, guys, the rules are extremely simple. Same concept, right? So if ever we're assigned Amazon, let's say, at the 172.50 strike, the following week, all we have to do, guys, is write covered calls. Extremely simple, right? And we're writing covered calls 0.5% to 1% in weekly premium. Same rules as the puts. Usually you do make a little bit more money on the call side, and we're going to write at our assigned strike price or one strike higher. Now, we write at the assigned strike, guys. If ever we get assigned 172.50 on Amazon, and Amazon the following week opens at 171, 170, well, then we're going to write the assigned strike because it's above us. But in the event that the following week Amazon opens, let's say we get assigned 172.50, and on the Monday session, it opens at 174, then you can get a little bit more aggressive with your covered calls. You can write one strike above the one in which you were assigned. So hopefully that makes sense for everybody, guys. That's just a quick recap of the strategy rules. Now let's dive right into last week's top 5 plays, and they were extremely juicy here, guys. So number 1 was Palantir. Palantir, I mean, we've been playing this one for darn close to about, a month and a half at this point in the lower $20, $19 range, and it just keeps performing very well. So we were looking for Palantir last week around $20.5 and $20. You can see here that on the Monday session and the Tuesday session, the stock was really hovering between 21 and 20.6, and all of these lower locations here would have opened up the 20.5 strike, which we were talking about, and even the $20 strike for last week. So if you were able to write one of these two strikes, then you would have gotten 100% profit, as obviously Palantir ended the week well above that, around 21.68. So congratulations to everybody once again who has played Palantir successfully in these lower levels, guys. Extremely juicy trade, even in the weeks to come, right? So very, very nice trade on Palantir last week. The second trade we were looking for was AMD. We were looking for AMD below the expected move, and the expected move for last week was about 160.5. So we were really looking for strikes 160 and 157.5 on AMD. And I'm happy to say, guys, that you can see here, this was the Tuesday session. Wednesday, we actually came down into the 163 level. That did open up the 160 puts, and it even opened up the 158 puts. So anything under 160, guys, was pretty much fair game for trades last week. And anybody who would have taken those trades would have ended up 100% profit, as well as AMD ended largely above our area of consolidation that we were looking to take the trade in. So very nice trade on AMD. I did take this one in my own account, and you guys would have been able to see that in all of last week's videos where I was showing my trade positions, right? The third trade we were looking for was Amazon. So Amazon, we were looking for Amazon, guys. The expected move was around 179.89. We were looking for two strikes, either the 180 if you're a bit more aggressive, or if you're a bit more conservative, the 177.5s. Now, both of those strike prices have now been assigned. I actually wrote the 177.50s myself on Amazon at the Tuesday morning lows right here around the 179 limit. So we are now assigned on Amazon shares. So very, very simply, guys, if you are assigned Amazon shares either at 180 or the 177.50 after last Friday, well, the covered call rules applies. These are the covered calls for next week, and you can see how juicy these premiums are, guys. If you were assigned at 177.50, the covered calls for 177.50 are $1.90 almost. Very, very good. And if we get a little bit of a bounce on Amazon here on the Monday session, these premiums should get even juicier. And if you're assigned at 180, the premium is not even that bad, guys. Still over a 0.5% rule, between $1 and $1.05. Same concept. If Amazon opens a little bit green on the Monday morning or even into Tuesday, you will be able to pick up a lot more premium on these 180 calls. So I'm not nervous about these positions at all, guys. I am with you in at 177.50, and I will be writing one of these two strikes on the Monday morning, either 177.50 or 180, depending how Amazon opens. If Amazon opens a little bit red, I'll write the 177.50, and if Amazon opens green, I'll probably get a little bit greedy and go for the 180 strike. So hopefully that makes sense on Amazon, but at least we were able to collect a decent amount of premium on the 177.50s before being assigned, and now we'll get to collect even more premium from writing covered calls. So this trade should continue to give us very, very nice returns. Now, our fourth trade from last week was Square. Square, we were looking for it, guys, because we're coming into the lower end of this range of support, right? Think 63 all the way down to about $60 is the range that I've been targeting, pretty much your January lows on a weekly basis. So the trade last week was anything under 63 we were looking for. And this is another trade that I did take in my own account. You can see the markets opened here on the Tuesday session, and I wrote these 63s when we were roughly in the 65.5 range. 63s was all the way down here. Now, it was looking like we were maybe going to get a sign on Friday, but the markets gave us a nice little bounce, Square ending over 64. So anybody who would have written 63 and under strikes, as we were saying in the video, you would have all pretty much realized 100% profit. So another very juicy trade in our pockets. Now, the last trade we were looking at, well, there was a few of them, but my favorite one, if you remember last week, guys, for the fifth position, I gave a bunch of different tickers to look out for and to go with which one looked the most attractive. That one for me was Fortinet, and I took it in my own account. You could have seen that last week on the channel when I was presenting the trades at the end of my videos, right? So Fortinet, I was looking for the $58 put, and that's exactly what we got here, guys. You take a look. Tuesday, we had a nice little drop on Fortinet. It came down to about $59.50, and that's when I wrote the $58 puts for about 30 cents. So we did get about 0.5% for those. Very happy, guys. Fortinet closing 59.32. So we did not get assigned those. I still love this stock, guys. It's coming right into my juicy support box. This massive range of consolidation right here, which starts at about $56.50 and really comes all the way down to about $50, right towards the lower end of this section right here. So I was looking for 58. I'm very happy with the way that trade played out. So another win in the books. So that's pretty much everything, guys, for last week's top 5 plays. Now let's jump right into this week's top 5. Excuse me. And you'll see that they're literally all the same, guys, but I'll be giving you a bunch of bonus plays at the end. The top 5 is really the ones that I do believe have the best potential, guys. Not only do they have the largest margin for error to the downside, a lot of these plays have about a 3-4% cushion before potentially being assigned, but they're also some of the most solid stocks that I come across. I'll be giving a bunch of bonus plays at the end, which kind of almost respect our conditions that we're looking for, but they're not as solid as the top 5 just yet, but they are ideas in the event that they get decent red days on those tickers at the end. That's when I'm going to be looking for the ones at the end of the video. But for now, let's jump right into the top 5, and you'll see, guys, it's the exact same as last week, right? If these are good, why should we change them? They're still within our levels, where they're still within the ranges of trading that we want to play them in. So we will continue milking these tickers for all they're worth. So the number 1 play, guys, is going to be Amazon to start it off with. So Amazon coming down here. The expected move on Amazon is 172.04 for the day. So let's see, can we find some premium 172.04 or lower for this given week? So taking a look at the Amazon options chain right here, you'll see that for the 172.5s, as in our examples prior, we are getting about 87 cents. That does respect our 0.5% rule. The only problem, guys, is that it's above our expected move, right? So one of two things, one of two different trading styles that we could do. The 172.50s, guys, are not that risky in my opinion. They are these lower ends of support right here. And even though they're above the expected move, guys, I do think Amazon will have a nice recovery rally intra-week. So if we get a little bit of a drop here on Monday morning, I may be a little bit more aggressive, and I may even do the 172.5s myself. If you want to stay very safe and be below the expected move, then if Amazon has a bit of a drop Monday or Tuesday into the maybe 176, lower 175, even high 174s, then maybe, just maybe, it opens up the $170 strike for you. So I'll be looking for one of these two strikes, guys, this week. 172.50 if you're a more aggressive bull, and if Amazon's a very high conviction stock for you. But if you really want to get the best possible pricing, you may just want to wait for a little bit further of a dip on Amazon and see if you can get the required premium on the 170s. Just a quick reminder, guys, 170s, you'd need to see about 85 cents, but if I would see 75, 80 cents on these, I would definitely go for this trade. Very, very, very juicy setup, guys, right? Prior all-time highs, we're above that now on the monthly. That's why I don't think the bears are going to be able to get through this location very, very easily whatsoever. So I will continue to play Amazon aggressively in the lower 170 range. Now, the second play for the day, guys, is going to be AMD once again. Why? Because it's still within our desired range of trading, right? Where I want to trade AMD all the time, guys, is pretty much 160 down to about 145. I know it's a fairly wide range, but now the bulls are putting in some good work. They're trying to reset this daily uptrend to the upside, trying to get this weekly uptrend back in motion as well, and trying to set up for the monthly higher low for further trend continuation. So AMD has been one of our semiconductor plays that's been a bit left behind as the rest of the sector has really boomed to new all-time highs. AMD is still kind of down in the mud right here. So the expected move for AMD this week is about 159.12, right within our sweet spot. Below 160 down about 150 is where we want to trade AMD. So let's go have a look, guys. Can we find any premium below the expected move of 159.11? Let's do it together. Let's pull up AMD stock right here. Right? So if we pull up AMD, let's go take a look, guys. Can we find premium below the 159? Well, AMD does not have $1 increments. You can see here that they're $2.50 strike increments, right? So what we need to do is either take the 157.5s or the 155s, both presenting very decent premium right now, right? For the 157.5, 0.5% would be about 80 cents. And we're getting more than 80 cents on the 157.5s right now, and it is below the expected move. However, if AMD dips a little bit into the Monday morning session, starts retesting maybe 164, 165, guys, it probably will open a lot more premium at the 155s. And obviously, guys, if AMD has a very bad day tomorrow, let's say it goes down, 3% to the downside, coming down 163, 162, guys, we go as low as we can possibly go on these strikes while still respecting our 0.5% rule. So one of these three strikes, depending on how much AMD can drop on Monday or Tuesday, I'll be looking for anywhere between 157, 155, and 152.50, as low as I can possibly get while still getting roughly 80, 75 cents on this bid right here. So that is the trade idea set up for AMD. Now, the next one we're going to go over is Palantir. Palantir has been featured on the channel for about a month and a half running right now because it's in such a juicy support range. Prior monthly support, prior monthly resistance, now going to be acting as support. Again, gorgeous monthly uptrend, hunting for that monthly higher low for the continued trend expansion. The bulls are desperately trying to get some weekly momentum going, and the daily, they've been protecting this lower $20 range, 20.5, extremely well over the past month and a half. So this is the trading range we will continue to want to play, guys. 20.5 to around $20. This sweet little pocket right here. Now, the expected move on Palantir for the week is 20.84 to the downside. So let us see how much premium is available at the 20.5 and $20 strikes respectively. So taking a look at Palantir, guys, you can see here that there's not much at the 20.5s yet. Arguably, there's only enough premium at the $21 level, right? 20.5, you need to see at least 10, 11 cents on the bid. It's just a little bit short right now. And the $21 strike, although it is presenting decent premium, guys, it's a little bit close, right? $21 from 21.67. It's about 3% away. Now, that is a decent amount of cushion, but then again, you guys know Palantir can move. So what the preferred setup would be is, let's say Palantir takes a little bit of a dip here on the Monday or Tuesday morning session down into 21.3, 21.2, really coming closer and closer to this $21 level. That indeed, guys, will free up the 20.5 and $20 strikes. So just watch out for a little quick drop here on Palantir Monday or Tuesday morning into the lower $21 range. It should be freeing up at least the 20.5s for about 10, 11 cents on the bid, or at best, if Palantir really has a bad Monday or Tuesday morning and brings us down to the 20.8 into this expected move, let's say, well, then you want to go for the $20 strike, right? So keep in mind one of these two strikes, those are going to be the trades on Palantir for the week. Now, the fourth trade is once again, guys, going to be Square. Square representing some good opportunity right now, guys. The 4-hour time frame is pretty much crushed right now, although daily is not oversold yet. You can see, guys, we're coming into this big area of support right here, about 65 all the way down to about $61. These are pretty much the January and year-to-date lows. I'm expecting Square to hold this position. Also a very gorgeous area of monthly lower support range. So Square, the expected move on Square right now, is about 61.48 to the downside. So let's see, can we get any premium below the expected move of 61.5? We're going to be probably targeting, guys, $61.60 if we can get the premium. So let's take a look here, guys. You can see that, as a matter of fact, $60 and $61 are giving us our 0.5% rule. So $60 is 34 cents and 61 is 41. So the best case scenario, guys, is if Square has a little bit of a dip in the Monday morning session, guys, down into, let's say, 63.5, even the lower $63 range, that will undoubtedly free up even more premium on the 60s, or maybe even unlock the $59 for 25-30 cents on the bid. So what I want to do, guys, specifically on Square, is I really want to get as low as possible, right? As low as possible in this wide range of support, right? $61, $60 if possible on Square. So these are the two strikes that I'm going to be looking for. If Square has a really bad day on Monday and drops, let's say, 62.50 or something like that, well, then I'll be going for the 59s. The art of options, guys, is we need to adjust depending on the size of the moves down and how close we are to the expected move, right? That is when we move further and further away from the price while still getting our 0.5%. So 59 all the way to 61 are the strikes I'll be looking out on for Square. Now, the last one, guys, is going to be Fortinet. So Fortinet is going to be part of, these whole cybersecurity sector. Now, there's 3 stocks that really caught my eye for this sector, and they were Fortinet, they were also Zscaler, right? Look at these setups on the weekly, guys. They're largely the same. Weekly come down into our big range of support. Fortinet, same thing. Weekly come down into our big area of support. And the third one is Cloudflare. Weekly big move down into a wide range of support. The one that I prefer, guys, just because it has the best fundamentals out of the 3 stocks, is Fortinet, right? But by all means, if your high conviction cybersecurity play is not Fortinet, let's say you like Zscaler, or let's say you like Cloudflare better, by all means, guys, you can definitely trade those. None of this is financial advice anyways. This is just the ones that I'm trading specifically. So Fortinet, guys, we're going to be looking for Fortinet. We really want to get as low as possible. Think $58, $57, coming as close as possible to this big range of support that's starting in the lower range right there. So the expected move on Fortinet, I apologize, I don't believe I put it on screen, so let's find it out together. We'll show you guys how this website works. You just type in the ticker right here, Fortinet, and eventually it'll refresh, and it gives us an expected move of 57.57. So 57.57 is right about, let's just call it right about there, right? So very nice area of support, guys. Let's find if we can see any premium below 57.37. So we're gonna be looking for 57 strike, maybe even 56 strike. So let's have a look, right? So you can see here that $57, we are getting over 0.5%, right? 0.5% would be roughly, I don't know, something like 33, 34 cents. And we are getting above that. It's giving us 41 cents right now. So the best setup on Fortinet, in my opinion here, guys, is if ever we have a red little day on Monday or Tuesday, bringing us down into the lower 59s, maybe even high 58s, maybe that frees up the $56 strike. I would really like getting the $56 strike. It's an amazing location for Fortinet, but still, I would not be opposed to playing the 57s. If Fortinet opens flat or even tiny amounts of green, I will probably be writing the 57. But if ever we open red, then I'll be going lower in the strikes here, guys, 56. And if Fortinet, for some rich reason, tomorrow opens really bad, let's say they open with a 2% loss or something like that, coming all the way down into the lower high 57s, let's say, then probably you may even get the 55 strike. So 57 down to 55, as low as we can possibly get while still getting our 0.5% rule. That's going to be the trade that I'm looking out for on Fortinet. Now, we're also going to take a look at a bunch of bonus plays right now, guys, just because I want you guys to get used to the setups, and I want to show you a bunch of examples of trades that I'm looking for. So hopefully it helps you in your trade selection as well. Now, keep in mind, guys, a lot of these plays, since we're taking them, sometimes they'll be daily oversold conditions. Sometimes we'll be coming into large areas of support, right? All the trades that I take, they all kind of have the same features. They're big areas of support, and usually they're weekly or daily levels. Sometimes you can even get oversold conditions with 4-hour or even daily time frame setups. The reason I'm saying these is because even though I'm writing short puts on a lot of these trades can be replicated using shares for swing trades, let's say, right? That may take a little bit more time to play out, or even call options. Let's say 45, 60-day out call options. If you see one of these stocks that I present and you want to make a little bit of a gamble for some upside recovery, well, these are all good plays for that. I choose to write short puts on them, but you'll see a lot more calls from me on the channel. I don't want to give weekly call positions, guys, because weekly calls, in my opinion, you really need to be trading the 1 minute or 5 minute time frames and looking for intraday swings. It's the best way to do it. But if you want to make longer swing trade positions, let's say you're looking for a bit of a weekly recovery bounce, usually those can be done with 45 to 60-day call options. a little bit out of the money and you won't get burned with time decay as aggressively as on the weeklies, right? So I'll be doing a lot more of the top 5 call option plays that I'm looking for, but it's tough to do them for a weekly basis, guys. That's the reason why you won't find a lot of top 5 options plays for the long side in these videos. I'll be doing them, but they will be more for extended swing trades that may take, 1, 2, maybe even 3 weeks to really play out and fully materialize. With all that being said though, guys, let's go through all of the bonus plays just so you guys get an idea of what I'm looking for. Celsius Holdings. Celsius, we have a nice little come down into here. I'm looking for short puts in the lower $70 range. Beautiful location for this company, guys. Just looking for the eventual monthly higher low and further trend increase. So Celsius Holdings, if we do see a little bit of a come down in here over the next couple of weeks, keep it on your watch list. I will be playing this one aggressively. Stock number 2 is going to be UPS. UPS, same setup. We're looking for the monthly bottoming out of this chart, coming into prior all-time high region right here, looking really crushed right now. Daily is not oversold yet, but we do have a nice basis of support forming down here. So UPS, if it does trend lower into the lower $130 range, I will be probably looking to play it a little bit more aggressively. Had a nice daily oversold dip into this region right here last week. So if ever we do retest these lows, maybe looking to make an attempt at some UPS shares or some UPS short puts as low as possible, guys. 130 is the target for me. Now, the next one that I keep playing every single week is SoFi, guys. SoFi, $7, $6.50. Such an easy contract to write, right? Huge level of support. And the bulls really doing a great job of defending this pretty much over the past year and a bit at this point, right? Let's call it about 9 months at this point, right? Very nice chart. Even if they're in the money right now, would not even be opposed to writing $7 puts right here, or even a nice swing trade location on SoFi. The only problem, guys, you can see it's sticky around this area right here. That's why it's tough for me to recommend a timing for call options, but it could be a very nice bounce play into the $8 range. Should be easy game in my opinion. Now, the next one is going to be CRM. So CRM obviously getting destroyed last week, coming down to a huge location of prior support, 200 weekly daily moving average right there. 212 down to about $200 is the location that I'm going to be looking for. If ever we get a little bit of more of a dip and consolidation onto CRM, below 220 again, 220 all the way down to 210 seems to be a very easy location, guys, to be swing trading CRM, either by picking up shares or writing short put options. So those are going to be some considerations for me in the next coming weeks. And then we have a number of other ones, right? Uber, look at this chart on Uber, right? Yes, weekly downtrend coming back down into prior all-time high resistance, should be acting as support. So if Uber continues to kind of grind lower here, I will be looking to play short puts, guys. 62 all the way down to $58 range seems to be like a gorgeous region for the bulls to really retest before another leg higher. So those are the trades I'll be looking out for on Uber in this location right here. Another one, Airbnb, guys. Airbnb, same concept, right? Coming down into a big range of consolidation right here. 140 pretty much all the way down to about 130, this 10-point range. Great location to be playing some Airbnb. I probably will be playing a little bit this week if I can find strikes below 140, let's say 140 or 139. If I can find some premium down there, probably going to be writing some Airbnb. Great trade location as long as the stock is down here. And now we get into a couple of them that are a little bit rich for a lot of people to write short puts on, right? Just because to write short puts on Adobe, let's say, you need to put up $44,000 worth of capital. Not everybody has access to this trade, but it is looking good for a little bit of a swing trade, guys. Adobe, daily oversold conditions, got absolutely crushed after CRM. A little bit of a swing trade right here. Stops go below the low, 434, and we're targeting the previous highs right here at about 42. Could be a very juicy swing trade location, either with shares or call options with a little bit more time on them, just banking on this recovery, right? Yes, the monthly is not looking the best, but it is coming into a very big previous range of support right here. And Adobe is down so much year to date, I would not be surprised if a little bit of a bounce is going to be coming quickly. So that is just a little quick trade idea on Adobe. Microsoft is the same, right? Microsoft had a nice retest of this big range of support last week. Looks like it wants for more. So Microsoft even, I will probably be looking for some short puts below 410. But if you don't have access to short puts, guys, could be a nice swing trade location, swinging towards the highs, of course, on Microsoft, looking very good. And then we also have another one, similar setup, Meta. Meta, if ever we come back down closer to the 450 range, similar like we did last Friday, could be a juicy location, guys. We're looking to trade the weekly higher lows into the weekly breakout uptrend formation. Could be a very nice trade setup for Meta, whether you're looking to do it with shares or a little bit of call options with some time on them. I personally probably going to be going for short puts around the 450 level. But great trade idea nonetheless. And then we have some trades that are in the less popular niches, right? So I always try to keep it with the thematic trades for this year, just because they're so easy to trade. Take a screenshot of this. I won't go through it, but some of them are tough to trade, right? EVs, solar, unprofitable tech, consumer discretionary, China, all because it's not the hot narrative right now with inflation up and prices up, right? And interest rates very, very high right now. But nonetheless, some of these trades are looking fairly juicy for a little bit of a swing trade gamble. Tesla, probably going to be looking to maybe make some swing trade opportunities on Tesla. 165 for some short puts could be interesting. 167 down to about 165, this range right here could be interesting, or a little bit some shares or maybe some call options for the potential Tesla breakout. Stops obviously go below the lows here, but we are targeting the breakout towards the $200. Tesla really holding up nicely, so I may be looking to swing it to the upside. Still, watch out though, unfavorable trade, right, in terms of the sector that it operates in. Nike is another one. Nike trying to break out to the upside right now. Could be a nice location to write some short puts below the established base of support right here. So think $92, $91. If you have a little bit of a retest, could be a juicy location, or looking for the breakout, retest and run. If ever we get a little bit of a retest, could make a swing trade opportunity. Nice little retest zone right here. Your long entry is there. We are targeting the gap fill of prior earnings, and your stop loss goes below the lows, right? So very tight stop loss for this trade and very juicy take profit opportunity on Nike. Once again, though, be careful because it is a sector that is out of favor right now. And the last one that is in a sector that's out of favor but looking extremely good is Alibaba. So Alibaba after earnings, breaking out, trying to set weekly support for potential weekly uptrend continuation, right? They finally broke out of this huge range of consolidation, and now they should be able to use this whole top level. Think the 78 all the way down to about $75, should be able to use it as support, and they already have been trying to use it as support. So quick little swing trade opportunity on Baba right here could be had. Probably short puts for me, 77 down to about $75, and Alibaba, we're really looking for the trend breakout, right? Any entries here could be rewarded with very, very juicy exit opportunities. Think 90 all the way up to about $100 for the breakout pattern on Alibaba. But once again, guys, remember, it's just in a sector that's out of favor, but I really like this breakout, retest, and potentially run trade opportunity. That's pretty much everything I had for you guys today. Hope you guys enjoyed the bonus trades. I really just give those just so you guys see the style of setups that I'm looking for. So hopefully that was educational. If it was, consider dropping a like on the video, guys. Would really appreciate it for the growth of the channel. Also consider subscribing if you're new. We do these videos every single Sunday night, and we also do daily market recaps Monday through Friday after the close. So tune into those if you have not seen them. And lastly, guys, if you have any questions at all on the strategy or on stock selection, on a play that you might think is good that maybe I didn't mention, leave it down below in the comments, guys, and I'll be sure to answer you within the first 24 hours. So take care. I'll see you tomorrow, guys, after the close. Peace.